Hey everyone! As you may have figured out, I spend virtually every waking moment trying to figure out where the real estate market will go. And of course, the prospects of the commercial real estate market are tied to the economy. Yes, there are other forces in play such as demographics, population, changing behavior, etc. But a big piece of the puzzle is the economy. The current economic climate is fluid. It's a moving target. Each month, one of the reports I monitor is the Blue Chip Economic Indicators. I was looking at the newest release and noticed that the consensus economic forecast for 2023 has nudged higher. I also noticed that the lower bound of the forecast jumped from negative 1.4% in January to just negative 0.6% in February. Then I noticed that only 2 economists are still forecasting negative economic growth in 2023. Last month, in the January report, 7 economists were forecasting negative growth for the year. And in the December report, 2 months ago, 13 economists were in negative territory. Now, I do want to point out that it is possible to have a mild recession and still have positive economic growth for the year. So the shifting outlook does not preclude a recession, but the sentiment appears to be shifting steadily toward a slow growth outlook in 2023. It's actually interesting how much the outlook has shifted over the last year or so. A year ago, in January 2022, the consensus economic forecast for 2023 was positive 2.6% growth. Then as the year went on, the consensus forecast dropped lower and lower, ultimately reaching a trough in October with expectations of just 0.2% economic growth in 2023. Then the trend shifted, and the 2023 economic outlook now stands at positive 0.7% growth. That's sounding more and more like a soft landing to me. When you add in the 517,000 new jobs from the January employment report and the 3% growth in retail sales that just came out the other day, the picture looks even brighter. So what could go wrong? All of the numbers I'm seeing suggest growth in 2023 could be stronger than many expect. But that in turn creates a risk factor we have to consider. If the economy delivers strong growth, inflation could remain elevated and the Fed will feel obligated to raise rates more than most expect this year. Right now, we're expecting a 25 basis point increase in March and maybe another 25 basis points in May. In total, economists expect the Fed to raise rates by a total of 100 basis points this year. If the Federal Reserve does a 50 basis point move at any point in 2023, it could stall out commercial real estate investment, at least for a short period of time as the market recalibrates. If the economy creates moderate, steady growth and the repairing supply chains facilitate declining inflation that keeps the Federal Reserve from hitting rates too hard, then we could achieve the elusive soft landing, and a byproduct of that will be a surge in commercial real estate investment activity. So as I've said in the past, we are not out of the woods yet, and we could always get a curveball. But each month, the economic data gets a little better, and the potential for a soft landing gets a little stronger, which suggests the commercial real estate investment climate could begin to heat up a little sooner than many expect. We'll see if it all plays out the right way. There are always risks. But as always, we need to keep our eyes on the horizon.